Hi friends, welcome back to the channel. In the previous episode, I mentioned that I bought into Meituan, but I didn't give so much details why I have included this company in my long-term portfolio. In this video, I will go through with you my investment thesis. I started to pay more attention into Chinese tech companies after I started reading this book called AI Superpowers, written by Dr. Kai-Fu Lee. Dr. Lee has a very good credential. If you look at his career, he worked at Apple from 1991 to 1998 in the area of speech and language technologies and interactive media. From 1998 to 2005, he worked at Microsoft and played a key role in establishing the Microsoft Research Asia and worked in Natural Interactive Service Division. From 2005 to 2009, he worked as president of Google China. Right now, he is the chairman and CEO of Sinovation Ventures, a $2 billion venture capital fund focusing on developing the next generation of Chinese high-tech companies. According to Kai-Fu Lee, if data is the new oil, then China is the new Saudi Arabia. The central argument of his book is that AI industry in China will excel in the AI arms race between US and China due to the following reasons. Number 1, training deep learning models require more of a brute force method than innovations, well suited to China's supposedly higher quantity but lower quality of software engineer compared to the US. Second, China has fewer data protection regulations than other countries, for example the General Data Protection Regulations in Europe or GDPR. So Chinese tech companies collect more data on users as compared to US tech companies. Third, Chinese tech startup culture is more aggressive than that of other countries, with fewer intellectual property restrictions and fewer barriers to vertical integration. Fourth, the participations of China's central government in funding and raising the status of AI industry. AI is impacting the future of virtually every industry and every human being. AI has acted as the main driver of emerging technologies like big data, robotics, and IoT, and it will continue to act as a technological innovator for the foreseeable future. If you are interested to understand more about his arguments, I highly recommend that you read his book. I can assure you that his viewpoints are quite interesting. Besides that, the story of Meituan is featured in his book. Next, let's talk about Meituan. I believe that many people outside of China are not familiar with this company because their business are mainly just in China. At first, I also struggled to understand this company, only knew that they are quite successful in food delivery service. I initially thought that how big can a food delivery service is, right? And my impression on the food delivery business is that it is not a very profitable business. But I found that I was wrong after I dig into the details. Meituan is a huge business, especially if we measure the company by the market cap, because market cap will price in the growth prospect of the company. If you have invested with StashAway, which has exposure to China tech via the KWEB ETF, you will have indirect investment into Meituan. If you look at the top 10 holdings, Meituan is at third place with an allocation of 7.8%. Only Tencent and Alibaba are bigger than Meituan. Similarly, for iShares Hang Seng Tech ETF, ticker 3067, Meituan is at the second place with 8.1% allocation. Even if you don't invest specifically in tech, a broad-based emerging market ETF has Meituan at 5th place with an allocation of 1.6%. So as long as you're investing in broad ETF, you'll have some allocation to this company. Before we talk about the business, I think it is important to talk about Meituan's founder, Wang Xing. Wang Xing graduated from Tsinghua University with a bachelor's degree in electronic engineering in 2001. He pursued a PhD computer engineering at University of Delaware from 2001 to 2004, but then dropped out of the program. In 2005, he created a Chinese version of Facebook called Xiaonei or On Campus. The look of the site is like a clone of Facebook. Wang Xing didn't even bother to change the signature blue color from the Facebook. The site was a hit, but Wang Xing had to sell it off due to financial problems. The new owners rebranded the site, which is now called Renren, which is listed on the US exchange. In 2007, he created a Chinese version of Twitter called Fanfo. It was China's first big microblogging site, but was soon shut down by the government over politically sensitive content. In 2010, he founded Meituan, which was based on the business model of Groupon. Wang Xing spotted an opportunity to adapt this business model to the local Chinese market. He assembled a team and rolled out the product and started getting traction. Then, all of a sudden, thousands of other companies spring out and compete in this business. In China, this period is known as 千团大战, literally means the war of thousands group buying. Meituan survived the war of thousands group buying. It later merged with Dianping in 2015 to become Meituan Dianping. It becomes a complex conglomerate of business offering group buying, reviews, and one of the world's largest on-demand delivery platforms. In October 2020, Meituan announced that the company had been renamed from Meituan Dianping to Meituan. Next, let's talk about the business. The company can be broken down into 3 segments. The first one is food delivery. This segment houses the food ordering and delivery services on Meituan's e-commerce platform. Meituan revenues from this segment comes primarily from commissions that are based on the transacted volumes on its platform and from providing online marketing services to merchants. Second segment is in-store, hotels, and travel. Under this segment, Meituan provide a platform for merchants to sell vouchers, coupons, tickets, and reservations to consumer. In a similar fashion to the food delivery segment, Meituan earns revenue here through commissions based on the volume of transactions processed and by selling online advertising space on its platform to merchants. Third segment is new initiatives and others. This segment consists of Meituan's smaller ventures. This segment includes the company's B2B food distribution services, microloan businesses, car hailing services, the Meituan Insta Shopping e-commerce marketplace, and other services such as bike sharing. Next, I will talk about why I like this company. Reason number 1 is founders Wang Xing and his management team. Business competitions amongst Chinese tech is brutal. Unlike US companies, in China, competitors have no problem copying each other's. So if you have a good idea or a good product innovations, that will not serve as a good moat. The moment you roll out, you will be copied instantly by your competitors. If the best ideas will not serve as a good moat, then what is a good moat? Basically, it is all about executions. Even when it comes to copying, you need to copy faster than your competitors. And you still need to keep improving the copycat products and deliver a great user experience to the customers. Wang Xing and Meituan's team has demonstrated that their execution ability is at top tier level. To illustrate this, let's take a look at the competitions between Meituan food delivery business versus Ele.me. The story below is taken from a blog called China Playbook. I'll provide the link in the descriptions. Nobody invented food delivery. There's food delivery before the internet. Ele.me wasn't the first internet company to do food delivery either. However, they were the first to achieve breakthrough. First, they choose which schools to open. The founders would go to each school and count how many food delivery riders enter and leave the school. If there were a lot of riders in and out, it means the school has a solid base for food deliveries. The restaurant will have their people giving out flyers. The student will stick them onto their walls. Whenever they need to get food, they could just call the number. The restaurants that offer food delivery would face a big problem. Come lunchtime, there will be dozens of students calling, and the restaurants would handwrite down the orders and addresses. When the orders pile up, the restaurants will have a hard time remembering which orders are sent and which are not, which result in high manpower and high costs for the restaurants. With this context, Ele.me created a software for the restaurants. The customer can order on the website. That way, the restaurants don't have to handwrite down so many details. The restaurants can also check off sent orders. The site also shows the waiting time so that the delivery riders can manage their deliveries, reducing their need to constantly check with the restaurants, which are already stretched for manpower. In short, Ele.me created an order management system for the restaurants. It improved efficiency tremendously, and therefore it is very welcomed by the restaurants. Ele.me didn't have to subsidize consumers, didn't have to convince consumers and restaurants to use their app, and didn't have to build their own fleet. This methodology allowed them to operate at positive margins from 1 to dozens plus cities while having a 200% annual growth rate. Ele.me's clever tactic has one problem. What they did was so capital efficient that they replicated the same methodology throughout their business expansion. If they went to a school and it didn't have a strong demand for food delivery, they wouldn't operate in the city. This methodology allows you to discover the early adopters, both consumers and restaurants, but it doesn't reveal the full future potential market. Ele.me operated in dozen plus cities, but they didn't operate in the city with most college students in China, Wuhan. Meituan's mindset is different. They use the total student populations to estimate the market size. They did research on the total number of college students that have transacted on Ele.me and its total order quantity. From there, they calculated the average monthly order per person, and they estimated that Wuhan would have 2 million orders per month. So Meituan entered in the incremental markets that Ele.me didn't operate in. They initially opened in 20 cities. Why 20? They have estimated the market size so they know it is a big business. However, they only managed to recruit 20 city managers. 2 months later, they operated in 60 cities. It didn't matter if the people were not familiar with the food delivery business. Just throw people in there so that consumers can see the product. When deciding on whether to enter food delivery, Meituan was conflicted for quite a while. Ele.me had a good product and a good team. But Meituan eventually decided they should go in because, first, food delivery is a big business. Second, this is not a winners take all market. The takeaway from this story is not about how big the delivery business in China or how profitable is this business. It is all about the insights that Wang Xing has when spotting for opportunities and also ability to execute their business plan to capture the market share. If they can do this to food delivery business, imagine how many other lines of business that they could enter and just grab market share. Besides that, if the landscape is stagnant, I don't think it is easy to disrupt the existing traditional business. The reason I'm bullish is because the technological wave and AI trends has only started disrupted, and many traditional businesses will be disrupted by tech. In this example, food delivery is an old business, but applying the AI to make the delivery 10 times more efficient is how company creating massive value. And only companies with great execution skill could pull this off. Here, I'm betting that Meituan will be that company, and I think that they will create other lines of business that is even larger than the food delivery business. This is similar to Amazon's e-commerce invented the AWS, and now the AWS is even more valuable than e-commerce business. How do I get such confidence? When I research the companies and read the annual reports, yes, it can give me some idea on the business, but it is not easy to synthesize the management thought process from those reports. So what I did is I watched many interviews. If you are interested, I'll provide 2 good resources here. First one is a series of interview videos of Wang Xing on the Bilibili platforms. I found that these interviews is able to let me understand Wang Xing's philosophies, strategies, and thought process. I found that he is a very pragmatic person and have great insights and can see far into the future. The videos are in Mandarin, so for non-Mandarin listeners, I would recommend Second Source, which is an English podcast produced by Acquired, Season 8 and Episode 3, The Complete History and Strategy of Meituan. This is a 2-hour 20 minutes video where they deep dive into the history of Meituan and their strategies. There are many interesting stories such as War of Thousands Groupons, Alibaba early investment into Meituan, and after exited from Meituan, they have acquired Ele.me, the merger between Meituan and Tianping, etc. This is highly recommended. The second book thesis is about the total addressable market and business positioning. In one of the interview, Wang Xing mentioned that China e-commerce market has been overhauled and digitalized by Alibaba and JD. However, when it comes to service market, for example, food and restaurants, food delivery, hotel and accommodations, entertainment like cinema, karaoke, basically all sorts of activities that require you to get up from home to enjoy those experiences and services, these are still operated in a traditional way, and they all will be transformed by the power of internet, AI, and automations. Meituan strive to be the company that will transform these businesses. How do they capture the value? Basically, they are sitting between the consumers and the merchants. The aggregations of the consumer spending gives them enormous power to negotiate for the best offer with the merchants. On average, they only ask for a 10% cut in their transactions, but the volume is so large that 10% is enormous value. Besides that, because all data such as consumer feedback and reviews are captured, this information can then be used to improve the services of the merchants, which then turn out to be a win-win for all. Next, let's talk about the risk. Similar to other high-quality businesses, the valuations of Meituan is not cheap. The metrics that I will focus on is price over sales ratio, which is around 13 times now. In my opinion, I will only consider it is cheap if the price over sales ratio is below 10. I won't focus too much on the PE ratio as the company only started to turn profitable few years back. Actually, the most recent quarter, the profit is negative due to increased investment into the new initiatives, specifically on the community group buying. Meituan is competing with other big techs like Pinduoduo, Didi, Alibaba, and so on. Hence, if you invest in Meituan, you need to be extremely patient. You can't expect the company to revert to profitability soon due to the stiff competitions and focus on growth. Although Wang Xing did mention that if he just scale down the investment into new initiatives, it is easy to turn profitable, but he is not going to do that. Their approach is similar to Amazon, which I like a lot. Okay, this video is getting a bit too long. I hope you enjoyed the content and learned something from my video. Before I end the video, just one final update. In the previous episode, I mentioned that I have sold a covered call on Meituan with strike price of 340. I've closed that positions and sold another covered call with a strike price of 360. This cost me around $270 but reduced the probability that my shares being called away. I did this because while I researched more into the company, I have gained more convictions and is more comfortable holding to the positions. As always, this video is only for sharing and information purpose. Please do your own due diligence. Let me know what you think about the company. Is there any serious risk that you think I should know? Please let me know in the comment below. If you watched till here, appreciate a thumbs up and subscribe to my channel and share the video with friends who might be interested. See you in the next one and cheers!